Hi, I'm Rob the accountant. Today I'm going to talk to you about 3 ways payroll companies are ripping you off and stealing your money. First, they charge $25 to $80 for each W-2. OMG and why? Let's jump to the IRS website, topic 752. If we jump over to topic 752, filing forms W-2 and W-3, specifically for forms W-2, employers must file electronically or by mail with the Social Security Administration and furnish to their employees Form W-2 wage and tax statement, showing the wages paid and taxes withheld for the year for each employee. Because employees' Social Security and Medicare benefits are computed based on information on Form W-2, it's very important to prepare Form W-2 correctly and timely. So, why do payroll companies charge for a document the IRS clearly asserts is part of the payroll process? Well, it's because they can, and you pay. Let's look at the numbers. Just simply 5 employees is $25 per W-2. It's an extra $125 a year. 10 employees, $40 per W-2 is $400 per year. And 20 employees at $50 per W-2 is $1,000 a year. Folks, this is your money, and there's no added value in charging a company to hit the print screen button unless you are ripping companies off and stealing their money. Please smash that like button. Number 2, pay-as-you-go workers' compensation. Let's jump to ADP. We're going to go over to their website because ADP is one of the largest large employer payroll companies in the world. In addition, ADP owns ADP Insurance Brokerage, which leads us into the second way payroll companies are ripping you off and stealing your money. And so you ask, how so? So let's jump over there first. First, we'll go over to ADP's workers' compensation site, your pay-as-you-go. And if you look at the site, here's your link. You guys can copy that. And there's some points that are really valid about workers' comp and things that may or may not help your business. And then if we jump over to this site, we're going to just look at the same thing as their insurance agency. And it's a different company, but it's still, everything branded, it's theirs. They work in conjunction with each other, and it's not a problem. There's nothing wrong with it, but let's focus on some of the things that I want to focus on. Insurance is regulated, isn't it? That's a great question, and yes, insurance is regulated. First, these companies are actually insurance agents. Yes, most large and small payroll companies are insurance brokers, which means they do not represent any company directly, but they're also insurance agents, which means they represent a specific carrier. Why both? Because it's about money. So why does this matter? Because on both sides of the coin, you get commissions. And as agents, they are compensated to be your agent and work for you. And this is true of them in the broker capacity. Second, pay as you go. Let's highlight some key points. And in doing so, you will see how payroll companies are ripping you off and stealing your money. These are quoted directly from the ADP site. You can relink them again here. There's nothing wrong with these things. They're very upfront and honest. And so if we read A, as the point that I pulled, a pay-as-you-go workers' comp solution is a premium payment plan that often allows employers to pay their workers' comp premiums based on actual payroll figures, not estimates. It's not insurance coverage in itself, nor does it replace an employer's existing policy, Businesses that use pay-as-you-go must still purchase workers' comp that meets all state requirements. A pay-as-you-go solution doesn't make workers' comp cheaper, but it does often result in more accurate premium payments, which may lead to a more favorable audit. For example, employers who are on a traditional payment plan and incorrectly estimate their premiums could end up owing money to the insurer at the end of the coverage period or be owed money that their business could have used during the year. Now, on a moment on this, I'm just going to call bullshit because they never want to give you your money, whether you know whether it's a little money or a ton of money or a small amount of money. They want to always credit the policy going forward. And really, workers' comp is the only policy in the country where you actually pay for just what you use. So if your payroll figures are A, that's what you're going to pay for. And if your payroll figures are B, which is less, then they're going to have an offset credit based on that. So unlike your auto policy or your homeowners, these rates are set and they are what they are for the whole year. Workers' comp is literally based off of the wages of your company. So then we go on to C, pay-as-you-go installment fees. Whether biweekly or weekly, the pay-as-you-go feature is offered by many payroll companies and levies a fee of $5 to $10 per pay period simply to manage your insurance policies that they're also getting a commission on in most cases. So in addition to any installment fee by the carrier, which there is, the payroll company is also charging you a fee, which is one more way that payroll companies are ripping you off and stealing your money. Number 3, OMG check signing. Yes, really. What do you mean? Yes, folks, that's right, check signing. Yes, payroll companies are ripping you off and stealing your money by charging you money to put a digital file on a printed check. Amazing. It's 2022. From judges to governors to the President of the United States, digital signatures are normal and add nothing to the work process. It's simply one more way that payroll companies are ripping you off and stealing your money. I'm Rob the accountant. I want to thank you for your time, for letting me show you 3 ways payroll companies are ripping you off and stealing your money. Subscribe and join Sunday nights from 10 p.m. Eastern Standard Time to 2 a.m. Eastern Standard Time for a live question and answer session on everything business. Please subscribe. Every subscriber matters. And thank you so much for your time.